This is the briefing for Friday, April 8th. All through the briefings, the intra-week briefings that I've been discussing, and for the last couple weeks, I've talked about the fact that the highs we saw in December appear to be at least a longer-term high, and that we are in a longer-term corrective phase. Now, I've done briefings before on the difference between a short, intermediate, and longer-term correction, and certainly this can be labeled as a correction because if you look at a weekly or monthly chart of the S&Ps, you can see that it runs and pauses and runs and pauses, and it's in a general uptrend. And this is a greater degree time and price counter trend rotation, and you can see that here. Those of you who have listened to these briefings in the past know a couple things that I look for when analyzing the markets. And I trade some stocks, and I trade mostly the indices in the options market, in the spiders, the Qs, and the IWM, and for the Russell. But there's a couple things that I look at, and I think this is important. One of them is certainly that counter trend rotations have certain characteristics. They don't happen all the time, but they happen a good percentage of the time, so it's always good to note them. The other is that, and these are just two of them, that a lot of times the Russell and the Dow Transports will signal a potential turn down before the other indices will signal that or begin to turn down themselves. And I think it's really important and pertinent to the analysis that if we look at the Russell here, you can see this is the IWM. This goes all the way back to almost the beginning of this year. And you can see that we came down, found a bottom right around the 188 area, and then we've been in rotation between about 188 and the 210 area in the Russell. But most recently, you can see that the indication is that we are rotating back down through this range to test this lower extreme. Now, that gives us one perception of a potential downturn. If we look at what's occurring in terms of the transports, you can see here that the transports have already rotated all the way down through the range and are getting ready to test the February 24th low. Now, this red line is about this chart is a end of day chart. It has not updated for today's trading. So the red line is where the transports closed in today's trading. So it's important to note, you can see the buying tail that came in on February 24th right through here. And then basically, if that buying tail begins to be traded through, which it did in yesterday's trading, then that suggests that it's going to get traded through, and the percentages then increase that it will be taken out. So basically, we have the Russell that has turned down before the other indices, and the transports that have turned down pretty much on their own as well, and testing the lower extreme. So if you look at comparable areas between the Russell and the transports, you can see that the transports are basically testing this lower extreme. The Russell is getting ready to test that. Only has probably about 10 points to go, 9 points to go before it would test this and potentially take it out. Now, the important thing also is to look at what's happening in a little bit shorter term, and I'll get to those charts in just a minute. I want to go back to the spiders now, and this represents the S&P. Now, the second characteristic that I look at, or I shouldn't say I look at several characteristics, but the next characteristic I want to talk about is that a lot of times they happen in three legs, where you get, well, the first leg, the second leg, and the third leg. And typically that can be the end of the counter trend rotation. And a lot of times there is equality between the first leg and the third leg. And I think I haven't recently done the numbers, but I think when I talked about this in a previous briefing, that this leg is approximately equal to this leg here. But sometimes they develop into more complex counter trend rotations where this is a 1, 2, 3 leg 1. This is a leg 2, and leg 3 is potentially in the process of developing. So I did that equality numbers, those equality numbers, and this comes down, this is this yellow line right here that would project the potential to come down to the 392 area. Now, right now you can see that even comparing this to the Russell and the Dow Transports chart, the spiders are really just coming off of resistance at 460, and that was a pretty important resistance that it did not break through. And it appears that it is in the process of rotating back through this range. The next level of support, longer term support, comes in at 430. Then below that's going to be about 415. And then, of course, 392 would be a projection for the end of it. If this is a one leg, this is a second leg, and the third leg is in the process of developing. Now, in terms of the Qs, you can see that it's a little bit different. You can see 1, 2, 3 here, complete. This is a second leg. I didn't do a projection on this one, but you can see that the Qs have traded right down through this 350 level, closing right around 349, and that is this high. So trading below this low, today's low in the Qs, would suggest that it is then in the process of rotating down to test this 318 level, which is the low of February 24th and the low of this day as well. So then the other important aspect is it appears that price development is in a counter trend rotation and that it is not complete. So if it's not complete, then we have to analyze what's happening in the counter trend rotations to this counter trend rotation, meaning if this is a trend in one time frame, then this is a counter trend rotation in this time frame. So we really want to know what's happening, because if bouncing off of this low and beginning to trade higher up to about the 370 area where resistance is, if the market was strengthening going through here, now it appears the price development was pretty significant, but if it's strengthening going up through here, then that would suggest that this is complete and we're going back to test the highs and potentially take them out. But if you look here, you can see this is a pretty weak rally, and you can see what's happening with volume. Volume is absolutely collapsing, now just beginning to increase again, although it was light in today's trading, as the market is beginning to trade lower. So going back to the spiders, you can see the exact same thing is happening here. Look at this part of the rally, and you can see what's happening with volume. So this rally was not attracting new buyers. This rally was weak and weak from an internal perspective as well. This is a 120-minute chart, and you can see the rotation occurring in this time frame, which is part of the rotation in a much greater degree time frame that we've been in, really going back to the first part of the year. Once again, this is market breadth, and it is declining and declining all through this rally. So even the internals of the market were declining. This is net volume, up volume minus down volume, declining also. Had a little bit of a spurt up in today's trading, but for the most part, the trend in net volume is down. So what volume we do have in the indices today, it is more down volume than it is up volume. Looking at the NASDAQ or the Qs, you can see the rotation that it's been in for going all the way back to the beginning of the year. And then you can see the shorter term rotation at the upper extreme, now testing this lower extreme and breaking through it in today's trading. This would be significant for the Qs to trade below and continue to trade below today's low and rotate back down through this range to test this 318 level that I showed in the previous chart. Now, once again, this is NASDAQ breadth. You can see we did have a couple spikes here, but for the most part, average breadth in the NASDAQ is declining or declined all through this rally here. Net volume, once again, in the NASDAQ is declining and not increasing, was not increasing This led to the higher probability that unless something changed in the internals of the market, that we were going to see some type of rotation back to the downside. Now, it is possible that we are not ready to test these lower extremes, although the Russell and the transports suggest that we are. But because we're in an area of shorter term rotation, I would say this is an intermediate rotation, it is possible that we'll see another rotation up to test 370. So we don't know that this is over, particularly right now. Once again, the Russell and the transports suggest that it is, but trading and continuing to trade below today's low, which closed below support, would then suggest that we're going to see rotation back through this range. Going back to the spiders, the same thing. They're not quite at this 440 level, but they need to trade lower and trade down below 440, which would be a confirmation of that as well. Looking at the Russell, you can see the Russell is already trading below that support. Here's the rotational pattern. Had a false breakout here, that testing the 208 level, then coming down, testing 202, and then trading below it. Now it appears that we had an attempted retest of it, and it appears that we're going to see lower prices as well in the Russell. So going forward, at least for the coming week, it's going to be important to watch what happens with resistance now. Short-term resistance in the spiders is going to come in at 450, which is, you can see kind of slightly this rotational pattern right through here for the last 2 days in the spiders. So that's short-term resistance, but important longer-term resistance is 460. Support comes in at 440. Breaking the highs of today in the spiders would suggest a test of 460. Breaking 440 would suggest a test of the 418 level. In the NASDAQ, once again, resistance is the 350 level. Trading above that would suggest rotation up to 370. Right about 355 level is short-term resistance, but trading below today's low is going to suggest a test of the 318 level. And the Russell resistance comes in right around 202, and of course breaking the low from yesterday in the Russell, which is right around 196.68, is going to suggest that we're going to rotate completely through the range and test 190. Once again, the Russell and the transports appear to be telling us and giving us a red warning flag that there is more downside work to do before we see any type of significant rally. Once again, watch the resistance levels, very important levels to watch in the coming week. Have a great weekend. I'll pick this back up on Monday for the intraday subscribers.